I'm Dennis Hudson at orangequant.com with your SPY forecast. It's Friday night, March 5th, well after the close, and I know it looks bad for shorts out there, but hang on, and it is going to get better, I believe, based on H205 and another little gizmo we're using. So stick around. Now, Thursday, we posted a note. Well, let me start at the top here. This inflection right here, where I'm marking that, that was Wednesday, and that was correctly called. It wasn't a big inflection, but it was enough to make a little bit of profit. And then, being of a greedy nature, I suggested, hold on, it's going to get even better after that. In fact, I posted a note to that effect on the last video, kind of an annotation note, which is like after the fact. And then, of course, it gapped up today, Friday. And what today's gap was about was the non-farm payrolls report, and it made the whole employment situation look better. And the market had been kind of waiting for some good news, and this was pretty emotional stuff, this run-up, and it wasn't on very strong volume. So I'm just pointing out some things to support what I'm about to say. Volume, in fact, and I don't show it here, but today's volume on the SPY, Friday's volume, was actually below the 50-day moving average, just slightly below it, so it wasn't real strong volume. This is people looking for good news, and some of them piled in and drove the price of the SPY up. Reality bites, and over the weekend they will think about their misdeeds, and come Monday or Tuesday they're going to start correcting. Now there's something else here, and I'm going to go away from quant and into technical analysis. This candle today, Friday's candle that I just circled, that's more of the nature of an exhaustion gap or an ordinary gap. And ordinary gaps get corrected very quickly, and exhaustion gaps also get corrected. It did not exceed the previous lengthy run-up of about 2 months ago, I guess it was. So it would appear to be an exhaustion gap. It's just the end of this trend. And if we hang on, as I say, I expect it to get very much better. Now let's switch to a quant perspective. And down here, where I am circling this in green, this I talked to you about in the video from late night Thursday, early Friday morning before the open. And you can see from this, and I'm going to magnify it for you, you can see from this that in the day since, it has got more firmly into a crossing situation, that pink or purple line down through the gray line, okay? So that tells us we're on the right track, and that it's going to start down very hard very soon. Now the extent of the downward move and the timing, this really needs to happen by Monday or Tuesday. It needs to start down. And the correction, first off, you've got your ordinary support line about here, and but people tend to be more reactionary and violent when they see things correcting like that. So we could really expect a correction down here to about, I don't know, 111.60, or even maybe down all the way down to 111. So hang on, because we're going to get a nice little move here out of this, going down like that. Okay? So I just wanted to update you on my thoughts on this, and I'm wishing you the best. I'm Dennis Hudson, orangequant.com, and if you didn't get it already, you'll want to go get the FLIR 2 ebook, which makes a lot of this reasoning easier to follow.